Okay, so in this video I'm going to show you how to construct a trial balance. So we finished with question 1, now I'm on question 2. So its trial balance will be a following question because you'll use the general ledger to do the trial balance, okay? Now we've constructed all these trial balances and we got the balance brought down over here. All these balance brought down in all accounts will go in a trial balance. But there are some T accounts which we never make, okay? Because there were no adjustment for that. So if you do not know what I'm speaking about, make sure you watch the previous videos. But basically, like for motor vehicles, there were no T accounts we have to make. But now when we're getting a trial balance, we need to transfer those accounts even though we don't have a T account. So let's start. So first of all, when doing a trial balance, you have to draw it up in the exam. You're not going to get an answer sheet. Make sure you say trial balance of whatever business. Then you make it like this, okay? Now the accounts, you say motor vehicles. You copy and paste the account name. Now motor vehicles is an asset, 18,000. So where does asset increases? On the debit side, okay? So on the debit side, you say 18,000. Now inventory, we got a T account, we got a T, okay? We got it for capital, we got it for all this besides accumulated profit. Accumulated profit is a type of like capital account, so it increases on the credit side. So we write accumulated profit. Then it'll be 5,000. So credit 5,000. Also take note, it doesn't matter the order of this because sometimes they like to put balance sheet account first, then nominal. It doesn't matter. Now, this is not a post adjustment, it's a trial balance. So for the monthly trial balance, so we don't need to put it in order. If you want, you can, okay, but you don't have to. Now that we've done everything that we do not have the T account for, we can go to the T account balance. Because remember, the reason why we did this T accounts is because we had adjustments. So we took this balance brought down from the T accounts and then we did the adjustments, and now this is supposed to be the actual trial balance updated one, right? So let's start. So we go on top. Let's start with the first one, which is bank. So bank. And it has a debit balance, right? Because the balance brought down is on the debit side. So that's why we put it on the debit side as 48,100. Also at the end, we should have debit equals credit. If that is true, then everything we did so far is correct. All the general ledgers and stuff, right? Okay, the next one is inventory. Inventory, we got a debit balance. We got a debit balance of 11,250. So 11,250. Next, we got sales. Now sales is an income, so it increases on the credit side. Now we never say balance carried down and brought down because at the end of the day there is no accounts over here. So we can just bring down the total and bring down the balance. So this is the balance brought down, 16,650. Now the next one. The next one is trade receivables. Trade receivables we know is an asset, and this increases on the debit side, 11,000. The next one, we got stationery asset. Stationery asset increases on the debit side. As you can see, there's a debit balance of 4,500. The next one we have is stationery expense. Same thing with stationery expense. It increases on the debit side. The balance is 1,550. Now the next one, we go down, it's loan. Loan increases on the credit side. So loan is 20,000. Sorry, it's supposed to be 10,000. Okay, so I made an error over here, so it'll be 10,000, but it's fine, correct it. Okay, so loan, the balance is 10,000 on credit side, we got that. Next is interest expense. Interest expense increases over here, so it's 200. The next one is electricity, which is also an expense, 2,100. So we bring the balance on the debit side as 2,100. The next one which we have, it's accrued expense. This is a liability, so it'll obviously increase on the credit side. 2,100. Okay, next we have drawings. Now drawings, it's like a capital account, owner's equity account. So it'll obviously, drawings will be over here. Sorry, it's a negative owner's equity. So drawings will increase on the debit side. Then next we have a capital. The capital increases on the credit side. So that's 55,000. Yeah, 55,000. After capital, we got trade payables. Now, trade payables is a liability, so it increases on the credit side as 12,500. The next, we got cost of sales, which is an expense account. So, cost of sales 8,800 on the debit side. Then we got cleaning material assets. So cleaning material assets, this is an asset, so it increases on the debit side. So that's okay, but see, 1,550 and kind of credit side 1,550, so it cancels out, right? So it's actually zero. If you want to, you can record zero, but because the balance of the T account is zero, we don't add it, right? Because this cancels out with this. Okay, if you put the balance bar down, it'll be zero, so we don't actually interfere with that. Okay, so the next one, we're going down to cleaning materials expense. Let's see. Cleaning materials expense. And this amounts to 1,550 on the debit side. Okay. And the last one we got is wages. So wages is an expense, debit side, right? Alright, now moment of truth. If the debit equals credit, we have done everything correct, even on the ledgers too. It means we've done everything correct. So let's see if we can total all this up. Hopefully it's all correct. Give everything going. Okay, so to total it up, use your calculator and make sure you calculated everything on the debit side. So put the amount like over here, right? So equals to, let's see, okay, 101,250, and let's see this one. Okay, let's see, moment of truth. Hopefully this is 101,250, otherwise, man. Okay, bang, 101,250, 101,250. This is the accountant's best feeling ever. So this means debit equals credit. This means everything over here is 100% correct. This means everything here is 100% correct. Perfect. Now there is ways in which, although the debits and credits are correct, it won't be correct. They are like a 10% chance, but 90% chance. If you get a debit and credit that's correct, you are 100% correct. Okay. Because think about it, instead of putting like debit and a credit account, for example, let's say you bought stock. So it's debit inventory, credit bank. But instead of inventory, you put another asset account like bank, so debit bank. And for like the credit and asset, you put like another kind of credit inventory. So it's the exact same thing, debit and a credit, you know what I mean? So it won't reflect that mistake. It's very good to know that, if any question come out about a trial balance, will it reflect all mistakes? Then you say no, okay? Because you can make mistakes and you can get a corrected balance. But most of the time it is correct, okay? But if you get a question, then you know what to say. Okay, so debit equals credit. So that is done. So this is how you construct a trial balance. Remember, to construct a trial balance, you have to do the general ledgers first. And remember, this is a monthly trial balance. It's not a post adjustment. Remember, post adjustment trial balance is different from a monthly trial balance. The monthly trial balance basically is bringing the balances on a new month and basically adding the adjustments to it. Then after you add all the adjustments to these balances, you make this trial balance for the next month. And then in the next month, you're going to use all these balances to bring it down in the ledgers, and then do the adjustments, and then get the final amount and put it back in here the next month. So it's like a continuous process. Okay. So far in these videos, I've done general journal, general ledger, and trial balance. That's like the accounting processes in order how you'll actually do it. Now the next thing after this, to be honest, this is like done. This is how like journal entries are processed. Okay. So yes, thanks for watching. Don't forget to like and subscribe.